Started. Well, Busta's here, D's here. The Golf Academy US. Well, good evening to the Golf Academy US. Pete's here. Hey, Pete, how you doing? Savannah, Andre, Joe. Hey, Joe, what's happening? Gallant is going to be here soon. Miss Bobby and Joseph Malley. How are you guys doing this evening? Ooh, gonna get that channel over there going. So we got 3 channels, no, 4 channels, 5 channels going. Holy cow. Alright, so we got 5 channels going at the moment. Alright, we got our YouTube, our TikTok, our Facebook, and our Instagram, and then another YouTube. So we got the screen in the back, which is live. We all know that. I like to have a live screen on YouTube, so this way you guys can look at everything, because you can't really see the little tiny numbers on your phone or your iPad. So if you want to take a look and see exactly what I'm talking about, what are the stock symbols? Can you read them on your phone? Probably not. Can you read them on your iPad? Probably not. That's why this screen here is live on YouTube. Go to youtube.10minutetrader.com. It helps you to see exactly what it is I'm talking about. So I'm talking about numbers. You actually get to see what the numbers are. Okay? Here's the last trade, the bid, the ask, the volume, the open, the high, and the low. And then you have your option chain. Okay, weekly options, the 14th, that one expired today. The 21st, that's going to expire this coming Friday. The 28th, 2 weeks Friday. The 5th of July, 3 weeks Friday, 4 weeks Friday, whatever, out in the future. Okay, we want to see what we are going to make. And the only way you can see that is if you pull it up on your TV, sit on your couch, get comfy. That recliner you got in the living room just collecting dust, wipe it off, jump in the recliner, pull it up on the big screen. You'll be able to see the numbers, because this is your money. You should be more interested in your money. Hey, Mike's over here on YouTube. Way to go. You should be interested in your money. What are you going to do with it once you get to that certain point where you need to start thinking about something to do with it? I mean, think about it. I'm 60 years old. I can't rely on anybody else. You know, it's my money. I got to figure out what to do with it. And those talking heads on TV, they aren't giving me the answers that I like. Okay? So I'm actually looking at the numbers and learning how to do it myself. It's really not that difficult. Okay? The trading strategy I have here was created for Fletch. How you doing? Was created for a 9-year-old. Really simple strategy. You buy a good quality stock, make sure the timing's right, make sure the numbers are right, and make sure it is okay with what your goals are. Deandra, is that right? Deandra? Luke, Paul Little, Paul Little 7. Noel, good evening. Okay, so ask yourself the question, do I like the company? Well, right now we're looking at Paramount. Paramount just happens to be here. We were looking at it earlier today. Okay, so it is a company you probably heard of. Paramount, they make movies. They've been making movies for over 100 years. So what do we think? Well, it was down a little bit today, but we're keeping an eye on it. Why am I keeping my eye on it? Well, you see, you can only have one 30-day high, and you can only have one 30-day bottom. But this was the bottom. Now the bottom's over here. Okay, you get a 30-day high, 30-day low. You got some profit taking right here, pulls back, gets to a certain point where it challenges the 30-day bottom, the previous 30-day bottom, and then she shoots on up. Look at that. 30-day bottom. Well, close to a 30-day bottom. Shoots up. Now you got your profit taking. Okay, profit taking is going to be done when the last of the people say, you know what, I made enough money off of that. I am good to go. John, how you doing? Kenneth, how you doing? Glad to see all you guys here tonight. Let's get the party started. Now, first off, let me go over a few things. Number one, there are 22 other people pretending to be me. Imagine that. I'm a little flattered. However, you guys in the audience, be leery. Okay, if you think I'm asking you for something, I'm asking you for money, or asking you to join this, asking you to join that, yeah. Send me your phone number. Actually, talk to me in person. Don't ever send me money if I ask for it. No. Get on the phone. If you hear me, you talk to me. I only take money from people when I meet them face to face. You know, big chunks. But anyway, back to where we're going. So, yeah, be leery. There's 22 other people pretending to be me. All right, don't be taken. I mean, I've heard stories that people got taken pretending, thought they were talking. Anyway, besides the point. Always be leery of what you're looking at. Okay, you're working for your money. I don't know how you got here. Really, I don't. But, hello, you giving good advice. Yep. Thank you there, Songbird. I think it was Songbird. Songbird. All right, anyway. What was I saying? Oh, yeah. You work for your money. Either you got it somehow, but you need to know how to make it grow. Jen, how are you? I've been missing you. Oh, Julie, happy Friday. So, it's your money. Figure out what is best for you. If you want to listen to the talking heads on TV, fine, go ahead. I mean, it is what it is. If you believe them, great. I believe factual numbers that I can personally see and I can personally react to. And then I like to see the actual chart itself. I want to see where the high is. I want to see where the low is. I want to see what the company's actually doing. If I'm going to put my money into a company, okay, I want to be able to feel comfortable about it. So rule number 1, never buy something you're not okay with holding for a long period of time, or that you don't understand completely. Not just because some random guy on YouTube tells you to buy it. Figure out what it is. Paramount, you know who they are. They make movies. Luciano Salvatore. So what do you sell here? I don't sell anything, Luciano. But if you want to hand out money, I'm sure there's a bunch of people in the audience be happy to get it. But anyway, let's get back to what we're talking about. So, I know who Paramount is. I know what they're doing. Okay, they had I think they had takeover bid recently. I'm not quite sure how that went over. But, it is what it is. News is news, whatever. But you cannot argue with the facts. Your 30-day bottom, your 30-day top. She drops down to another 30-day, which is close. Okay, she pops up, pulls down, and now we're looking for the new bottom. Well, where's the new bottom? I don't know. It might come up Monday, Tuesday, or Wednesday. I don't know. That's why I look at it every week, because I like the numbers that it pays me. Love to all the stock monster gurus. Woohoo! Thank you. So anyway, what was I just saying? I get distracted easily. See that? I invested $50 every day for a year. What could be my possible return? Yeah, no, please. Really? I don't want to do that. Where was I? Oh, yeah, rule number 1. Never buy something you don't understand. Okay? So, I like Paramount. Your 30-day high here. 30-day high here. Then another one here. Now she's dropping. Eventually, when the bottom is found, and they will find the bottom eventually, that's the best time to buy. That's why this is on my radar. I'm waiting for it to find the bottom, turn around, and then go back up. Because that's all they do. Look back. Let's take a look back. Okay. You see it do anything other than come down, go up, come down, go up, go up, go down, go up, go down, go up, go down. That's all it does. You take it one 30-day period at a time. I do it 1 week at a time. So I'm looking at the last 30 days, and I'm trying to estimate where it's going to be the next 5 days. Because I want to jump in on Monday and be out on Friday. Okay, that's where I make my money. Safe, predictable, consistent, 1% per week. I want to know where it's going. Okay, well, here's the high of the year. Here's the low of the year. Looks like a double low right there. Here's where it was a year ago, and this is where it is now. Great. So it's a downward turn. Great. But at what point do they say, all right, this is the bottom? Because you cannot get any lower than the bottom of the year. And if you do, that becomes a new bottom. So that's what I want to look at. Because eventually, they'll find a new bottom, turn around, and go back up. And that's where I want to jump in, when they actually realize, hey, this is the bottom, here I am. Good, great, I want to jump in, ride it on up. Now, we have a bunch of those that we're looking at. All right, so, let's go take a look at some of the interesting stocks we found over the week. Okay, I think we found about 20 of them, decent companies that we want to take a look at. All right, so Oracle. Actually, Oracle is on the list, but good call there. Sinba. Nice call there, Sinba. Why not? We'll take a look at Oracle first. Well, no. I'm going to go from the top of the list to the bottom, not from the middle. Okay? I don't want to go from the middle of the list. Unless I'm at the top of the list, and then we'll go through them all. Top of the list. Not that it's the top of the list. Okay? Just so you guys know. It's not the top of the list. It is the order in which it came. You know what I mean? It's like if somebody says, hey, how about JD on Monday? Okay, great. We'll take a look at that one. Write it down. And then on Tuesday and Wednesday, say, hey, how about we look at AT&T or Albemarle? Okay, great. Then I write it down. It's not of an order of importance. It's just when they all popped up on the list. All right, so JD is the first one we're going to look at. And JD is not one of my favorite stocks, but here's the thing. It's kind of choppy. See it? See how choppy it is? And we did this a while back, and I don't know why somebody actually mentioned it again, because I think JD doesn't actually fit all the criteria that I like. I don't remember why we bought it, but we did. We bought it earlier this year. So, last 30 days, 514. Where's 514? Right there. All right, 30 days ago, we opened up at 33.41 and hit a top of 35.69. Walgreens. Okay, Walgreens is on the list. It wasn't before, but it is now. What are you telling me? I need to do cash secured calls. That's not what I said at all, Riley. Nope, didn't say that at all. I'm not telling you anything. I'm just telling you, don't buy something unless you know who they are, unless you know what they do, and you're okay with buying it. Okay, so the trading strategy I'm teaching here, it's safe, predictable, consistent. I make 1% per week. That's my goal. So how did it come about? Well, when my daughter was 9, back in 2008, she said, Daddy, can you teach me what you're doing? I said, okay, fine. So here's the challenge. How do you teach a 9-year-old to trade in the stock market? Well, you got to come up with a trading strategy that's simple, safe, predictable, consistent, and no way to lose. Exactly, triangle sign, covered calls. It's one of the safest trading strategies there is. 1% a week is extremely low. I make close to 50 to 100% a week. Riley, good for you. I really think you're at the wrong place, Riley. Seriously. If you're thinking of jumping in anything here and making a lot of money, that ain't it. You're in the wrong place. Okay, I don't want you wasting your time. Seriously. Okay, I'm 60 years old. I have no time whatsoever to sit in front of a computer to try to find something that's going to go through the roof. Nope, don't do it. I do slow, boring, consistent, predictable. That's it. Slow, boring, consistent, and predictable. Okay, I want to live comfortably off of the money I have. I have no desire for it to go from comfortable to extremely comfortable or dead ass broke. No, sorry. Okay, and that's the audience that I'm looking for. People that are not in a hurry, that don't really look for a huge jump up. I'm just looking for 1% a week. That's it. I don't want to sit in front of my computer. I don't. Okay. If he was actually making 100% per week, he would take, yeah, Doc, probably. But anyway, there are some people out there like that. They're looking for a new shiny object that's going to take them from broke to rich. Well, great. I'm letting you know right ahead of time, this ain't it. This is for us. This is for us, us older folks who've seen a lot of crap, and we think, you know what? I'm perfectly happy with where I am. 1% a week is perfectly fine, because 1% a week is 50% per year. Okay? Keep my money in my account. There you go. What do I think about Intel? I like Intel. Okay? I like Intel. I'm going to put it on the list, so we'll take a look at it. INTC, because I do actually have some Intel, and I do write calls against it every week. Okay? Thoughts on AVGO? It's a little overpriced for me. My total humble, my honesty, I don't do anything over 250 because I'm just not there. So what's the story behind 1% a week and what you do for it? We're going to get to that. I'm going to show you. I'm going to be here until 11:30. That's almost 3 hours. Trust me, your questions will be answered, and they'll be answered more than once or twice in the 3-hour time frame. Yeah. Banks give 5% interest per month. What's the point of trading? DHFJDJJ1. I think you're misrepresenting something, or you don't know something. I don't know of a single bank that gives 5% a week, or 5% a month. They have 5% annually if you're lucky, or 5% for a 3-day, what is called 3-year CD. Yeah. Anyway, yeah, I don't think so. Needs some work though. All right, Gallant, I'm not quite sure what we're talking about, but you're just chiming in. Anyway, Desmond Campbell, and that usually hedge funds. Fascinating idea, James. Would love to hear this simple but effective strategy. Well, hang tight, you'll get it. Okay, now remember, it was created for my 9-year-old daughter. Simple, safe, predictable, consistent, blah, 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 all that stuff. Okay, so, number 1, it had to be simple. Number 2, it had to be safe, predictable, consistent, and no way she could lose. Great, so how do we do that? What do you think about long put on Disney? Yeah, no, sorry, Riley. It's a simple no. Okay, so, how do we figure that out? Well, rule number 1, never buy something you do not want to hold long term or that you do not understand. Number 2, never sell at a loss. Number 3, make sure the company has 20 years or more of increased dividends. Number 4, weekly options. Number 5, make sure the numbers work. Okay, so I said 20 years of increased dividends. What does that mean? Dividend kings, 50 years or more. Dividend aristocrats, 25 years or more. Dividend champions, 25 years or more. That's over 150 companies right there. The dividend challengers, dividend contenders, 10 to 24 years of increased dividend. That's over 300 on that list itself. And then, of course, we got Warren Buffett's list because we like Warren. Okay? If it's good enough for Warren, it's good enough for me. Okay, so those are the only stocks I look at, and there's 9,527. We looked this morning, 5,927. Every 5 years. I have no idea what every 5 years means, Desmond. Okay? No idea. I have no idea what you're talking about. Okay, so, where was I? Shit, don't get old. Forgetting things. No, I don't forget things. All right, anyway, back to where we were. So, out of the 9,527 companies that I can pick in the stock market any given day, I own, yes, Desmond, 20 years of consecutive increases in dividends. 2014, 2015, 2016, higher and higher and higher. Yes, and weekly options. Why? Because I want weekly cash flow. That's the way it works for me. This is my strategy. I came up with it for my daughter. It's simple, it's consistent, it's predictable. It's about 1% per week. So let's get into some of those. I've been waiting about 10 years for a 30% increase in that stock. Well, good for you, Riley. Best way to set and watch the strategy. Hey, Wallace True. It's weird. They don't allow you to move the digits around so I can read it. It's like all one word. What are some good dividend stocks? Okay, Will Slug, we're going to get there. Yes, okay. We're going to get there right now. Okay, so we just got here. I'm going over the strategy, telling you what it is, how it came about. It came about for my 9-year-old daughter in 08. It has been working ever since then. All right, Walmart, WMT. I like Walmart. It's on the list. My criteria, I just told you, 20 years of increased dividends and weekly options. Just those two. You eliminate 97% of all the other companies in the whole stock market. Just those two criteria. Might have some miles, friends, but it takes time to learn these things. Okay, not really. Do you like real estate investment trust? No, I do not. Google this or what? Ooh, that's a good one. I have no idea what I'm Googling. Alright, so anyway, let's get to it. It was created for a 9-year-old, so if you're finding this difficult, I feel sorry for you, and I know that might be insulting to some of you. But, created for a 9-year-old, simple, safe, predictable, consistent, and no way to lose if you do it right. It's really not that difficult. Don't think you know everything until you know everything. First thing I want to do, as I said, dividend kings, aristocrats, dividend champions, dividend contenders, and Warren Buffett's list. Out of those 5 lists right there, I get close to 300 companies. Close to 300 companies. So each one of these companies has over 20 years of increased dividends and has weekly options. So what do I do then? Okay, so you got 300 companies. I have to put them into a calendar by when they pay their dividend. Okay, there's 4 quarters in the year: January, February, March, quarter 1; April, May, June, quarter 2; July, August, September, quarter 3; October, November, December, quarter 4. Interesting thing, quarter 1 almost looks the exact same as quarter 2, and guess what? That looks the exact same as quarter 3, because each one of these companies pays out a dividend every 90 days. So Halliburton and Schlumberg pay a dividend on the same day this quarter, and guess what? 13 weeks from this date, they'll be paying it again. And guess what? 13 weeks from that, it goes again. Gallant, you want to look at Kroger? KR? It's on the list. Okay, so imagine that. This list just superimposes itself in 13 weeks, because there's only 13 weeks in a quarter, so every 13 weeks, this exact same thing pops up again. Okay? Comcast pays the first week of the quarter. Every quarter. Okay? I look at Comcast once every 90 days. Okay? Here it is right here in the first week of July. See, this is the week of June. I mean, this is, sorry. This is the month of June. Okay? Okay? June 1st, all the way to the 30th, or whatever it is. And then this week right down here below is the first week of July, which also happens to be week number 1 of the 3rd quarter. Okay, this is week number 13, this is week number 12, and we are currently in week number 11. Okay, the 15th. Today is the, no, wait a minute. Today's the 14th. Sorry. Today's the 14th. Wow, look at all these companies that pay dividends. Holy shit. I got a whole bunch of Macy's. I didn't even realize that, because I usually don't hold a stock coming into the dividend. So I bought Macy's last week. So I got a premium last week. I got a premium this week. And now I get to get the dividends. Nice. Premium dividend. Cool. I didn't even know that was happening. Alright. James, I've used your strategy for 3.5 months with decent success, but this week was tough. Sorry, Secretariat. Okay. Do you apply wheel strategy with this? You can if you want. I personally don't. Gallant, PSX. Not lifted out of 1 this week. No, neither was I. But did you make your 1% this week? And are you going to make your 1% next week? Okay, I made over 1% this week. I think 2 weeks ago I didn't make 1%. But I made plenty last week. Okay, well, that's the... We're not looking at the stock appreciation. We're looking at rolling, okay? Now, you were only in for this 3.5 months? Wait a minute. What did you say? 3.5 months. Okay, and you make your 1%. I'm guessing you sell into dividend. That's how the option comes in. Well, usually that was pretty quick. Was it 19, 22, 249? The rest of the numbers, whatever. Yeah, that's basically it. Okay? You buy the stock before the dividend. Okay, here's the dividend for BBY. Buy it 2 weeks out, I get a premium, and a dividend. Okay, that like triples or quadruples my returns. What is wrong with that? If it works. And then I get out here after I got the dividend, when she gets back to the target price again. And then I can always look at all the premiums I bring in and the dividends I bring in and find out where my cutoff is. You know, where my profit and loss is. So at what point, how much have I made, and how much can I do? I'm planning on getting into Dollar General on Monday. All right, I think Dollar General, we'll take a gander at that one in a little bit. All right, Gallant, we'll take a little bit. Take a look at it in a little bit. All right. That being said, let's get back to where we were. All right. So, the simplicity of the program, the strategy. It's really simple. I look at the calendar. Each one of these dots on the calendar represents a company that I like, that I would have no problem whatsoever buying. Okay, once you come up with your list, remember that 9,527 companies that I can choose from. I only look at 300. I don't, when I see these pop up, I never question if it is a good company or not, because I've already done that. Okay, I already isolated the companies that I would buy if everything was right, without any hesitation, and hold on to for a long period of time with no hesitation. It's never a question of, do I like the company? Well, it's on my list. I already vetted it out. I've already done all the research on it. So yeah, it's on my list. I will buy it if the numbers are right and the timing is right. So, step number one is find your companies that you like, that you would buy, and then put them into the calendar. And the calendar will tell me exactly when to look at it, because the stocks go up just before the dividend. Can we have your list? Well, empty pockets, yeah. People in my trading group. I have a private trading group. You're welcome to join if you like. Okay, private trading group. They have access to my list. Every week we look at whatever stocks are on that list. All right, Lex. We'll take a look at Starbucks also. I actually have some Starbucks. Okay. How do we vet the list you do? Well, simple. You do your research. How many years has the company been in business? Who's leading it? What's their profit margins? How often have they increased their dividends to their shareholders? How consistent are they with their dividend increases? Okay? What is the profit margin year over year? What is their target? What is their profit and loss? What is the book value? There's a lot of information. Boss, are you streaming in real? Yeah, I think so. All right. So, once you do the research to what's on your list, don't go by my list. See, my list, I say you know all of mine. You know, Hewlett Packard, Kohl's, Coca-Cola, Macy's, Altria, Philip Morris, BBY, Best Buy, Mark, Occidental Petroleum, Nike, McDonald's. That's my list. I've already checked out. So yeah, I like those companies. They've been around for a while. They've done more than 20 years of increased dividends. Great, they're on my list. Then I take a look at them, and they have weekly options. Great. Okay, so I look at the calendar. All right, these are the ones I'm looking at this week. Great. Well, on my stocks, am I picking up? Well, I'm only picking up one this week. What about General Electric? We'll take a look at it. Right? I'll take a look at General Electric. Okay? But first thing, get your list. Second thing, put them into the calendar. Third, after the calendar tells me what I'm looking at. Okay, this is what I'm looking at this week. Okay, great. What am I buying it for? What am I selling a covered call for? And is that 1% or more? And which platform are you streaming? Which platform are you reading? Okay, I'm streaming on YouTube, TikTok, Facebook, and Instagram. In a couple of weeks, we'll be adding a few more streams. So, here's what it is. Okay, so where were we? Oh, so, first thing, create a list. Second thing, put it into a calendar to find out when to look at the stocks. Okay, great. What am I paying for it? What am I selling it for? And is it going to be 1% or more? That's your key right there. What am I buying it for? What am I selling it for? The numbers, remember? Rule number 5, make sure the numbers work. Okay, the numbers, that's only half the numbers right there. Great, I'm getting over 1%. Now what do I want to do? I want to see where the high is. I want to see the low is. Let's go back and actually take a look at JD. First thing I want to take a look at is the 1-year chart. Why? Well, because I want to see where the stock is right now. I want to get an idea of where it's going. That kind of just makes sense. First thing I want to see, the high. Next thing I want to see, the low. Next, where was it a year ago? Where is it today? All that should take less than 3 seconds. Don't believe me? Try it. Ready? High, low, was, is, that direction. Less than 3 seconds. It's really not that difficult. High, low, where was it? Where is it? What direction is it going? It was here, now it's here. It's actually that easy. Well, let's try it again with the 90-day chart. Ready? 1, 2, 3. There it is. High, low, where was it? Where is it? Really not that difficult. Don't make it harder than it needs to be. There's your high, there's your low, this is where it was, this is where it is. Now in the last 90 days, she's going to an uptrend. Okay, cool. Easy enough. But where was it going to be in the next week or so? Because that's more important than the trend. Okay, high is here, low is here. She goes up, pulls back, up a little bit, pulling back again. Well, where's it going to go next? It's going to go to the upside. Normally, based on what we're seeing here. Now we want to look at the last 30 days because we want to have an idea of where it's going to be the next 5 days or next 10 days. Because it doesn't change very much from day to day. Now, from week to week, yeah, that's a lot more time frame. Month to month, it's even more time. Year to year, that's even more time. But I only want to see the next 5 to 10 days. Okay, it gives me an idea where it's going. That way, I can see if my 1% trade that looks like possibility is actually going to come into fruition. So, let's try it again. Ready? 1, 2, 3. Yeah. High, low, where was it? Where is it? What direction is it going? Well, there you go. It's really not that difficult. Here's my high. 30 days ago, 32.50. Then she shoots on up to 35.50. Then drops down, rebounds, okay? Drops down again, rebounds, now drops down. That gap right there is going to fill because we now have an official new 30-day bottom. And when is the best time to buy a stock? The best time to buy a stock is at the bottom. Because where's it going to go once it hits the bottom? Well, of course it's going to go up. Well, here's your 30-day high, here's your 30-day bottom. There can only be one 30-day high, and there can only be one 30-day bottom. We know what the high is. Okay, now we're looking for the 30-day bottom. Once we find it, this is the tricky part, once you find it, because how do you know where it is? Well, for me, I like 2 days to the upside. Okay, because you got a gap here. That gap is going to fill eventually. Are you covering only U.S. stocks? Unfortunately, yes, I'm only covering U.S. stocks until I hire more people, and then we can work as a team to do it. So, yeah, I like the idea of Canadian stocks. I like the idea of European stocks. I just don't know the rules. And, you know, once you get the data is data, it's easy. Okay, once you find out the rules, once you find out the data, then you take it, you twist it, and you bend it, so the odds and the probabilities are in our favor. Okay. One thing I do like about the European is the options. You can only exercise the options on the day of expiration. I like that idea. Here in the United States, you can exercise it anytime you feel like it. Do you teach, sir? Yes, I do. I sold some $1,000 covered call and CSP this week. Okay. Did you do well? I mean, hope you did your research and hope you did, halfway decently. Great, simple explanation. You're cooking something here. Well, I thank you kindly. So, again, it had to be simple, safe, predictable, and consistent. No way my daughter could lose. And you know why? No way she could lose. Because if she lost, I wouldn't hear it. I wouldn't hear the end of it from the wife. It's like, she didn't mean it. And it's like, oh, wow. And then my daughter, I lost something. Yeah, no. It had to be simple, safe, predictable, consistent, and no way she could lose. Make another 800 of this week. 5th week green and consistent profit. Lex, good for you. I'm happy that you're doing well. Okay, so that being said, remember the 5 rules. Always, always, always never buy something you don't understand. Okay, so if you don't understand it, don't buy it. Okay, this is JD. Do you know who they are? Do you know what they do? Are you okay with buying it, owning it, and holding it? Because you might have to. Now, the longest I've ever held anything is 9 months. Now, I did collect premiums every single week as it went down, as it came back up. Okay? So, rule number 1, never buy something you don't want to own or that you don't understand. Number 2, never sell at a loss. It kind of defeats the purpose. Number 3, make sure the company has 20 years of increased dividends. That way, official food reviewer, what are premiums? Oh my goodness. I'm a bag holder on Tesla. I have no idea what that means. Oh, 10 bagger. Okay, yeah, I get it. I collect weekly. Yeah, so do I. So, as I was saying, never buy something you don't understand or you don't want to own long term because you might have to. Okay, the longest I've been doing this for over 20 years. The longest I've ever held anything was 9 months. Okay, and that was Kimberly Clark. I've held Target for 6 months, and I held PPG for 6 months. Those are my 3 top winners, if that's the way you want to look at it. Okay? Anyway, enough. JD, it looks like as soon as it finds its bottom, because Monday, when I say tomorrow, I mean the next trading day. The next trading day, which will be Monday, I like 2 days to the upside. It's a 50-50 shot. It's going to be higher. It's going to be lower. Which one is it going to be? Monday. If she's up, great. I like 2 up days before I jump in. But you got to like JD. If you don't like JD, don't do it. That simple. You don't like JD. You don't know who they are. You don't know what they do. You're not okay with holding it. Don't do it. Next one on the list would be Dell. Did we already take a look at Dell tonight? We looked at Dell recently. That much I do know. Okay? Now, Dell, we looked at it a couple of months ago, and it was a no, hell no. Because you see this thing right here? Yeah. As she's going up, it's like, yeah, oh, hell no. Eventually, that's going to find a top, turn around, massive profit taking, and it's exactly what happened. Okay? Because that's all stocks do. They go up, and then they go down. Okay? Up, down, up, down, up, down, up, down, up, down. Okay? Once it hits its top, that's me and you, the buyer, saying, wait a minute, no, this thing's not worth $180 a share. Not today. Not this year it ain't. So it got up to, what was it, 179 something, and then she just dropped. Sir, if you cover Indian market, your channel will boom. Yeah, but like I said, I still need to find me, a co-pilot, so to speak, or co-anchor. Makes it easy with 2 people. 2 brains are better than 1. So, that being said, let's find out some of these questions, because I stopped the questions. Alright. Okay, what are premiums? Okay, I'm here, 1 bagger. Okay, Wallace, good. I think you might be in the wrong place, though. Seriously, Wallace. But collect weekly, you're right, the lines. What's going on with 3M? We're going to take a look at 3M. Now, you do realize on 3M that new CEO is going to have a lot to make up for. 67 years of increased dividends. 67 years of increased dividends. CEO comes in and cuts the dividends. What the hell was he thinking? They're a 100-year-old company. They've increased their dividends every single year for 67 years. I would have taken a pay cut. I would have told all the executives, hey, let's save face. Let's take our pay cuts. Let's make sure our investors get their increased dividends. Don't want to come off that Dividend Kings list. 67 years. And he says, anyway. All right, so you're new. You cut you a little bit of slack when you're new. Just sit, absorb some information, ask questions. Teamwork. How much were you down on those 3 stocks? Teamwork, I didn't lose anything on those 3 stocks. I basically broke even. Okay, so let me pull it up for you. People do ask about this once in a while. I'm going to zoom into it and find out exactly where I was. Right about there. And we're going to go there. Alright. Here's the 6 months in question. Alright. So I bought Target at 135. Alright. So I got a nice premium. I think it was around 2%. As she drops, I'm still selling the 135s, but the premium collecting gets smaller and smaller. As it drops even more, it gets really small, the 135. So as it gets down to 128, I have to drop it from 135 down to 132. Still 5 strikes, 5 strikes out of the money, so it doesn't look probable that it would get filled. So as it goes down, 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 okay, now remember, I bought it in July. Here we are in the beginning of October at 102. I still own it at 135, okay? So as it's slowly going down, every single week, I'm collecting a premium. Granted, it's not 1% all the time, but it drops. So as we're at 102, I'm selling the 107s, which is still 5 strikes out of the money, still bringing me in some money, but not a whole bunch. Okay, so now let's go see what happens from 102 here in October. Okay, it goes all the way over to middle of November. Okay, November 13th. Okay, this thing was at like 112, 113, and I sold the 115s. Okay, so what happens on the 14th? The 14th, she gaps up $16. That's called a black swan. Okay, so all the money I made here, okay, I collected 2 dividends and about 30 premiums. Okay, so all the money I made from here, all the way down, all the way down, all the way down, got wiped out by this one move overnight. And then some. Okay, I had to buy back that option that I sold for 50 cents per share, which brought me in $50 for that week. Remember, I'm not looking for a huge amount, I'm just looking for a consistency. So that was $50 that I collected, and it cost me, I think it was $12,000 I had to pay, because if I didn't pay the $12,000 right from here to here, okay, this was $12,000 right here overnight. If I didn't pay that, I would lose all this. Because remember, I'm in at 135, okay, and I had to buy it back at 125. Okay, so then I had to wait. So premiums, I guess now I'm in the hole. So premium, 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 dividend, premium, 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 then right up until the 2nd week of December, I finally sold it, and I barely broke even. Carried it for 6 months, barely broke even because of that right there. That's called a black swan. That does not happen that often. Needs some of your opinion. Telegraph. Okay, I have no idea who that company is. Seriously. Yeah, so that's what happened with Target. That's not what happened with Kimberly Clark. I'm looking around. I don't know the days. Kimberly Clark, KMB. Now, I've had Kimberly Clark since March. But I got, wait a minute, I don't remember. I'd have to go back and find out. But I know I definitely got rid of it before this black swan. Okay, I didn't get caught by that one. Which I'm kind of glad I didn't. 3M has 2 different June 21 June. One is a 10% premium. Never seen that before. Alright. So, were those calls exercised when it gapped? No, believe it or not, it wasn't exercised. Okay? Because I seen it go from around 128 to jump up to 136. Wait, that's Kimberly Clark, sorry. Target. TGT. Okay, so I owned it at 135, and from here to here, it jumps up to 130. So before the person can exercise his option, I had to buy it back and pay that 12,000 bucks that day or the very next day. Either that, I was going to lose my position. So the Wall Street's not that cold-hearted. You know, they will tell you your position is being exercised, which means it gives me the option to buy off that option. Interesting, it gives me the option to buy back the option. Yeah. So when you sell a call option, whoever you sold it to, whoever bought it, can now do whatever they want between the time, for the time that it's active. And it's active from the time you sell it until the expiration date. So in this example right here, okay, Monday, Tuesday, Wednesday, Thursday, Friday, okay, on Wednesday she jumps up. I had to buy it back on the Wednesday because I sure as heck wasn't going to hold it into Thursday and Friday because I didn't know whether or not that person was going to exercise their right to buy it from me. And if they did, they'd be buying it, I think it would be at 112. I think it was at 112, yeah, because I was down here at 108, so it was 112, and then she shoots going up and up. But that's what happened. And that does happen once every 5 or 10 years. It just so happened to happen to me, I think it was last year, or was it the year before? I think it might have been last year. I'm not 100% certain. Anyway. Alright, so, that being said, it's a risk to buy and sell premiums during those earning time frames. Yep, it is. If that's what you follow, you should turn on earnings dates for your chart. Alright, Lex. Can you trade overnight? Not yet, but they are thinking of having some stocks to be able to trade 24 hours. I don't know how I feel about that one. Lex, I should turn my earnings dates onto my charts. I don't pay attention to earnings, Lex. Okay, now the reason why I find dividends to be more consistent than the earnings. What do I mean? Well, you have, let me get rid of this. Pull this up, get that there, and get rid of this. Okay, so I tried it once or twice, okay, but every time you see an earnings, these are the earnings right here for all these companies that are on my particular list. So, hold on, Tessa. When I see profit not able to book quickly, and I can't read it that fast, dude, on YouTube. You gotta make it shorter messages and then do them over and over again until I actually read them because they're up on the screen for a couple of seconds and then they disappear. See, the ones on Instagram, they stay there until I answer. And the ones on TikTok, they stay until I answer them. Alright, so, back to what I'm saying. Earnings. If you have positive earnings, is it any guarantee the stock's going to go up? Not at all. Taja, how you doing? It's not a guarantee that it's going to go up at all. Positive earnings, I've seen stocks go down, and I've seen stocks go up. There's no real rhyme or reason and no definiteness to it. But you know what does have definiteness to it that I've seen over and over and over again is dividends. When the stock is paying out its dividend, the stock has a tendency to go up before the week of the dividend. So here's BBY right here. Okay, so here's the dividend date right here. Okay, the stock has a tendency to go up. So if I go 10 days before it on a Monday, stock has a tendency to go up that week and the next week before it gets to the dividend date. Okay? There's a consistency there, and it's happened over and over and over again to a point where you're looking at the 85 to 95% of the time. Some of them are 100% of the time. Okay, now the reason why I know that, you probably already know the reason why I know that. Let's go look at historical data for NIO. Okay, see, here you go here. Does NIO even have a dividend? No, they don't, so it's not going to give me, it's not going to prove anything. Okay, let's look at Microsoft for a second. Oh, here's a dividend right there. Okay, 75-cent dividend. Okay, great. Well, let's go 10 days before that. 2, 4, 6, 8, 10. Okay? Column number 1, column number 1 over here is the date. Column number 2 is the opening price of the day. Column number 3 is the high price of the day. Column number 4 is the low price of the day. And then column number 5 is the close, and then the realized close. I don't know what the heck that means. And then the volume. Okay, great. So, if I know when the dividend is, the 15th of May, because they have them every year at the same time. The 15th of May, 2024, most likely the 15th, 14th, somewhere in that area, 2023. The same thing with 2022, 2021. The company has consistently increased dividends for 25 years. It's not that difficult to find one. You find a dividend right here, go 10 days prior to it. What was the opening of the day on the 2nd of May? Well, it was $3.97. How much is the dividend? 75 cents. So, $3.97. Oh, look at this, $4.07. That's an $8 increase. $4.13. That is a $15 increase. And higher and higher and higher. Look at this, all at $4.23. The stocks have a tendency to go up before the dividend. It is more predictable than earnings. That's why I used it. I created a software that went into, this is called the data stream. Okay, this is where all the data is. The date, the open, the high, the low, the close, the adjusted, and the volume of each and every stock that has over 20 years of dividend payment increases to their shareholders. The information is out there. You just got to know how to put it together. It's actually that simple. Now, years ago, 15 years ago, when I first started, I had to do this all longhand until I paid someone to create a software to scrape the information. When's the dividend? 10 days before the opening price, add the dividend into it. How often does it increase? 95% of the time. Well, hell yeah, I'm going to buy it 10 days before the dividend. Why the hell not? If it's done it 9 or 10 years in a row, more than likely it's going to do it again. So yeah, that's where I got that information from. It's a long way. The old way. Go into the data stream, find the numbers, crunch them out, do it for a 10 years time frame. How often does it happen? If it happens often enough, don't you think that's a good indicator if the stock continues to go up before the EX date? Well, I got 300 companies plugged into my calendar. Okay, great. Well, all of these 6 do the exact same thing. Well, then why won't I buy them? I mean, history has a tendency to repeat itself. If the stock goes up, why does Hershey's go up the first week of February? Why does Weight Watchers go up the first week of January? Why does Apple go up in the fourth quarter? Certain stocks react a certain way towards a certain time of year. Okay? Also, they react to their dividends. It's more predictable than the earnings. I have looked at the earnings before. Okay? I have looked at the earnings. They're right there. Okay? Positive earnings doesn't necessarily mean the stock's going to go up. Even coming in to the earnings play. Okay, the week of the earnings. Okay, so Nike's here on the 27th. Okay, so if I went 10 days before, you know what? Let's take a look at it. Okay, the 27th. We're looking at the 10th. Nike on the 10th. Just for the fun of it. Okay, so that's a little experiment. I've never actually shown this live before, so let's take a gander at it because we don't know what we're going to be up for. All right, we can't look at Nike because the 27th is not here yet. So let's look at Oracle. Oracle on the 11th. I would want to have gotten in on the 27th. 27th, but you know, there was no trading on the 27th, so the 28th. So let's take a look. Oracle on the 11th of June. ORCL. Okay. So here's the 11th of June. Okay. 10 days prior. 2, 4, 6, 8, 10. Okay, 223. See the numbers? The opening was 223.24. Okay, so it went up to 224.82 the same day, and then it did go up. The 6th, the 7th, Thursday, Friday, Saturday, just before the 11th. Okay, so it did. How often, how consistent is that? So that was June 11th, 2024. So what's June 11th, 2023 look like? June 11th, 2023. Yeah, it just happens to be a dividend date. Go figure. Can't really prove that point if it's a dividend, because dividends and never mind. I just don't do it because I consistently find that dividends work much better than the earnings, and I hope they just end that conversation. Because I have looked at the earnings. We've even witnessed it this year. We've seen a couple of companies that have positive earnings and the stocks go down. Okay, so it's not as if it doesn't happen, because it does. All right, let's go up. How can a stock like 3M have two option chains for the same date? Well, all right, you ready for the answer? Galans, you ready? Okay, so do you remember a few months ago, okay, just before 3M got taken off the Dividend Kings list, it was at a certain price? All right, now, Gallant, you've been here, you were witness to it when it was happening, because the numbers were all wonky and they weren't giving dividends they weren't doing premiums for a couple of days. They actually took 3M off the trading list a couple of days, and that was a few months ago. Okay. A few months ago. See the chart right here? I don't remember exactly what it was. I think it may have been in January. Okay, we had that big drop. Okay, right there. I think that's what it was. Now, 3M was at a certain price, and then some craziness happened. I think there was a big, huge lawsuit that they had to pay, or whatever. Okay, and then they took them off the Dividend Kings list. They cut the prices, so the prices were different. So here's where it comes to two different dates. Now, more than likely, the dates you're talking about were options that were either bought or sold prior to this event. We can call it the event horizon. There you go, the event horizon. So what happened before this event was one set of options at a certain price. And then when they did the reboot or the readjust or the reset, a global reset on 3M right here, the end of January, all these options, the ones that we're seeing now that have two options, yeah, they were probably sold after the event. Okay, so when you have two different, so you have an option at this price, the price gets adjusted, then you have another option at this price. Eventually they're going to meet together, but they don't meet exactly the same. That makes sense? Okay, so you have a big event, and it was a big event for 3M. Okay, they, from 67 years, taken off the Dividend Kings list, and then they stopped. I think they cut their dividends. They paid out a big, huge fine, and a big, huge mess happened, and they shut the trading down for 3M. But that was back in January. I don't know if you remember that, because I was in 3M at the moment. Jen, you tried to jump in also. I tried to do a credit spread on it, and I got a really nice premium on the credit spread. And then the very next week, I tried to make adjustments on it, and then it disappeared. Okay, so that's usually how it happens. When something happens to the stock price, like I have options on Ford for $12.17. Where the hell do you come up with a number like that? But all the current options are in 50-cent increments, 17, 17.50, 18, 18.50. So why do I have an option at $12.17? Well, Ford came out with a special dividend, and when they do that, everything changes. So when you get an option on one side of the event and then an option on the other side of the event, when they match up, they don't match up properly. So you have two different options at the same price, but something's not quite right. Hopefully that answers your question. Missed some. I love to short the high dividend stocks the day before the EX dates. Okay, good for you. Hey, boss man, it's good to see you on here again. All right. User 952858. Kevin O'Donnell. Sorry, Kevin O'Donnell. User 1922. Ooh, we can call her Gatsby. User 1922. Gatsby was a big thing back then, wasn't it? Or Capone. All right. All of the fast talking I've heard on the internet, this actually explains what happens. I'm going to take that as a compliment. Thank you, I think. Can't see anything. Change it to dark mode. Paul, I have no idea what you're talking about. Riley, well, then you should be in Eagle Bank since they paid 10% dividends. Riley, I've never heard of Eagle Bank. What's the stock symbol? Give me the stock symbol, Eagle Bank. I'll take a look at it for you, and then I'll tell you why I'm not into it. Can we know the 5 rules? Yep, the 5 rules are simple. Never buy something you don't understand, you don't want to own for a long period of time, or doesn't make sense. If it doesn't make sense, you don't know who they are, you don't know what they do, and you don't want to hold it for a long period of time, don't buy it. It is actually that. I don't know if you get any simpler than that. If you don't know who 3M is, yeah, see, I'm pointing in the wrong direction. If you don't know who 3M is, don't buy them. I mean, they've been in business for over 100 years. They used to be a dividend king until some ass snacker came in and cut the dividends. 65 years of increased dividends. They've been in business for over 100 years. Okay, they've seen World War I, World War II, Korea, Vietnam, the Great Depression, the Dust Bowl, stock market crash, the oil embargo of the 70s, the Y2K. They've seen all that crap. And they continue to increase their dividends until January. Okay, now they're on a different path. Who knows what we're going to do? But they're still over 100 years old. Okay? I like to think that a lot of the employees are still there. Even though whoever the new brainwave is that cut the dividends, I mean, you know, hey, you take a vote amongst all the workers of 3M. If I can almost guarantee, if you come out and tell them the truth, hey, we're going to cut the dividends for our, I'm having a hard time versing it. We're going to cut the dividends. We've increased dividends for 67 years, but we're going to cut them this year. Or we can all take a pay cut and pay up the dividend to get back on track, and then after we get readjusted, we'll keep continuing doing business as usual. I kind of like to think that most of the employees at 3M said, you know what, that sounds like a great plan, because now you've taken away something from the American public that's never going to be replaced. 67 years of increased dividends, that was like a safe haven for a lot of people. Now you cut the dividends. Well, what are we going to do now? Well, let's jump ship and go someplace else that doesn't cut their dividends. It's actually that simple. There's only 54 companies that are dividend kings. That means only out of 9,527 companies, there's only 54 that have increased for more than 5 decades. That's it. 3M used to be on that list. Not anymore. I'm pretty sure if you went to all the executives, all of the, all the employees, you'd say, hey, if we take a 20% pay cut for the next 3 or 4 months, we can pay the dividend to the investors and not lose something we worked 67 years to gain. I don't know. Did they even suggest it? I mean, if you're a CEO and you're a CEO of 3M, you're making millions of dollars a year. If you're making millions of dollars a year, you could probably go 1 year without one. Think about it. Possibility. All right? Even the executives who are making hundreds. You know what? If we want to keep our status as being a dividend king, we all gonna need to take a pay cut. Anyway, is what it is. Don't get me started on politics. Not a fan. All right. To clarify, 10 days into the dividend payment or record. No. Okay. I like it that you're kind of paying attention. I say kinda. Okay. 4 dates to remember. The announcement date. That's when the company announces when they're paying a dividend. The ex-dividend date. That's the last day the stock trades before the dividend is actually paid out. Date of record. Whoever owns the stock on this day is entitled to the dividends. If you want a dividend, you have to buy it before the EX date. Date number 4, the payment date, when it actually gets credited to your account. They're right there. They announce them every year. You can take a look. Ooh, let's try something fun for a second. Just for a second. June 2024. Just get an idea. See the stocks that are on here. Okay? Now, we're going to go to June 2023 and tell me how much it's changed. They're all basically the same, except for, a few days may have moved. Now, they move the days because, there's not 365 days a year every single year. Okay? We have an extra day this year. Okay? But look, most of them are the exact same. Now, I'll go to 2022. Oh, wait. They're all the exact same again. Year after year after year, the companies pay consistently right around the exact same time. Then here's BBY, Mosaic, Hex, Hess, Coca-Cola, Macy's, AIG, Nvidia, Kohl's, Hewlett-Packard, Goldman Sachs, Halliburton. Year after year after year, they always pay right around the exact same time. And that's why I say this strategy is boring as hell. It's the same stocks over and over and over again. But here's the thing. Any video you ever hear me do, it's, hey, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader. Once you understand the concepts, once you have chosen your stock, put them into your calendar, so you know which ones am I looking at today. Well, I'm looking at these, and that's it. Okay, I look at these 6. Does one of them make it or not? If one of them does, great, I'll buy it. If it doesn't, okay, great, I'll wait till the next week, and then I'll get that one. But usually, 98% of my money is invested at all times. Why? Well, because I've been doing it long enough, I know that, these are good companies, I have no problem holding on to them. And I've been doing it long enough to know which direction they're looking at, what to look for. It's really not that difficult. Okay? Always go back to rule number 1 and rule number 2. Never buy something you don't like. Okay? Never sell at a loss. Make sure there's 20 years of increased dividends. Make sure it has weekly options. And then make sure the numbers work. The numbers, first, when are they paying their dividend? Second, what am I buying it for? What am I selling it to someone else for? What am I collecting? Look, 101. The 101 is going for 106. Now, that's 1%. Okay, we know what the dividend is. Okay, we know what the dividend is. We know what the purchase price is. We know what the covered call would be. But the strike on the option, because the option gives you the option of doing things. It's interesting how they came up with that number. Well, what do we call these things? We call them options because you have an option to buy it or the option not to buy it. Okay, it's the right to buy it, but not the obligation. Now, once you get into puts you become obligated. I don't like puts. Puts become confusing. And if I'm trying to teach a 9-year-old about puts, no, it didn't work. So it had to be simple. Do you remember that? It had to be simple. Safe, predictable, consistent, no way she could lose. Okay, 5 rules. Never buy something you don't want to own. Never sell at a loss. Make sure there's 20 years of increased dividends. Make sure there's weekly options, and make sure the numbers work. Well, the numbers, 101, 101, 106, that is more than 1%. Great. What is the chart telling me? Well, first thing I want to do, the 1-year chart. Take a look. High, low, where was it, where is it? That's simple. High, low, where was it, where is it? Which direction is it going? Well, here it was a year ago, now it's up here. Well, for the year, it's tending to the upside. Now, the company's over 100 years old. Do you really think I care about this little thingy right here? No, not really, because she's going from here to here, and that's all that's going to be said for 2024. Well, this time frame. Well, what happened in this time frame? Well, this time frame, it went up. They're not going to talk about these dips. The company's over 100 years old. You think that, 100 years, 11 days, and 6 months, you think that they're really going to care about that? No. They want to know, well, what did it do in 2024? Well, this is what it did. That's it. All this daily crap, that's all noise. Okay, I want to know the next 5 days. That's all I care about. Okay, this is the trend that it's heading. All right, great. Well, let's take a look. Last 30 days, 90 days. Okay, last 90 days. Look, high, low, where was it, where is it, which direction is it going? Less than 3 seconds. It's not that difficult. Don't make it more confusing than it needs to be. The high, the low, where was it, where is it, which direction is it going? It's going up to the upside. Okay, great. Now I want to look at the last 30 days because I want to get an idea of where it's going in the next 5 or 10 days. Because there's nothing I can do about what already happened. Okay, what already happened, it already happened. What I'm looking for is, what do we, the investors, the buyers and the sellers, what are we thinking at this moment in time? Well, this is what we're thinking at this moment in time, right here. This is the last 30 days. This was today, this was yesterday, the day before. Great. Based on this, where is it going? Well, what does it tell you? 30 days ago, we were in an uptrend. We got our high of the 30-day period, and then we had profit taking or the downtrend, because that's what happens. It goes up. We say, me and you, who are the investors, we say, wait a minute, that's a little bit too high. I don't think it's worth 106 or 107. If it was worth more, it would have went up. It is that plain and simple. Whatever was happening in the economy 3 or 4 weeks ago made me and you think that it's not worth more than 106. So we start taking our profits. Because look, 5 days before, it's at 99. Okay? 99, she jumps to 106. That's a $7 move. That's a 7% move in a week. Well, of course we're going to take profits. We take our profits and look, it's now at 96.50. Wait a minute, 3M at 96.50? Hell, I'm going to buy some. So what happened? She goes up, a little bit pullback, up again. Now we're at 104, so whatever's happened last week to this week, now we're saying, no, it's not worth 105 this week. So now she's going to the downside. And she'll continue going down until she finds that new 30-day bottom. Because as the days progress, we're getting closer and closer to the 30-day bottom, and then we need a new 30-day bottom. Because you can only have one 30-day bottom, and you only have one 30-day top. At this moment in time, here's your 30-day top, sitting there like I'm the king of the hill, because basically it is. I'm the king of the hill, there's the top of the 30 days, right there. Well, what happens there? Well, it jumped up 7 points in 5 days, or 7% in 5 days. Well, of course there's going to be profit taken, so it did, it's got there. So that's all stocks do. They go up, they go down, they up, they go down. So where's it going next? It looks like it's going to the downside. Great. Not for next week, but the week after. Because where we are, look at the movements. They're not that huge. So maybe by next week we'll be down somewhere in the 96, 97 area. Okay, maybe. Maybe. There's no exact. But maybe. So we'll take a look at it next week. Because I'm kind of curious. And I like 3M. Even though they did cut their dividend. Sorry, I'm writing up 3M for next week. So we'll take a look at that next week. Alright, so That was 3M. Next on the list, alright, can I see an example on your profile? Now, let me ask you a quick question. Okay, are you on this screen here on your TV or your computer, someplace where you can see the numbers? Because you can't see it on your phone or your iPad. Okay, this is live on YouTube. I do that specifically so you can see the numbers. Okay, you can't see 101, 102, 103, 104. You can't see those here on your phone. Okay, so let's go to my portfolio. Right there. Okay, the10minutetrader.com. Here's all my trades for this year. I'm going to go all the way down to the bottom. Right there, here's the bottom. Okay, week one in the first quarter. Pull this one up. What do we have? Well, we have CVS. Bought it at $80.90, sold at $79, collected $215. Yep, that's over 1%. Ford bought it at $12.30, sold at $12, got 35 cents. Only got 5 cents on that one, not 1%. Okay, General Motors, 26 on the 36 call, 40 cents on the 20s, which is Macy's, which is 2%. Okay, and that's like 3/4%. So adding them all together, okay, 2.12% for this particular week. Right, that's week number one. Okay, week number two, Macy's, Ford, General Motors, Clorox, Lowe's, Ford, 1.3%. 0.85, 0.9, 1.03, 1.06, 1.9, 2.03, 2.12, 4.6, blah, 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 so on and so forth. Okay, here's the two accounts. Account number one started off at 117 at the beginning of the year. It made 28% as of 2 weeks ago. I haven't posted last week's and I haven't posted this week's. I haven't posted them yet. So more than likely, I'm up over 30% already, and we're not even halfway through the year in this particular account. Now, come over here, look at this one. This one, 50-50. Half cash, half margin. Excuse me. Okay, half cash, half margin. A margin account is very risky. I do not suggest anyone use it until you know what it is you are doing. Consistently know what you're doing. Because half of this money is mine and half of it belongs to the market maker. The half from the market maker is borrowed. I get to pay interest on that. Now, just to let you know, this particular one is 8% annual per year. I personally will go up to 15%. I will borrow money at 15 to 18% a year to do this. I have no problem borrowing money whatsoever. Anybody want me to, anybody want to lend me money? Fine, I'll give you 12% a year. Don't mind at all. Okay, so what is this coming up to? 69.5% so far, and we're not even at the halfway mark yet. But it's a lot riskier. Okay, higher risk, higher reward. Here, very safe, all cash, no margin at all. Okay, it's up 29%. 28.5% as of 2 weeks ago. Okay, so I have no problem whatsoever borrowing money from people at 10, 12, 15%. No problem at all. Okay, so let's get back to where we were. So yeah, you want to go take a look at the numbers? Fine, they're there. Knock yourself out. Why are those two drop downs on the option chain for 3M for 2? Somebody just asked that question. Do you see what it says? 21 June 24, 7 days, 100. What did I get? Oh, okay. So, that's one for next Friday. Here's another one. But what does it say? It says something totally different. Okay? It's still 21st of June, but in parentheses, SOLV 25.20. That's some kind of code that they know what it is, why it was saved from. Remember I told you about the what do you call it? The oh my goodness, the line of origin. What did you call that? Right there. Event horizon. Okay, the event horizon. Okay, anything prior to January 24th is more than likely these options. Okay, anything from here this way is probably these options. That's why there's two. Because when the stock changes, they stop trading and just things go crazy, yeah, they have to issue new options and start a whole new option chain over again. Can I educate, please? Sure thing, Justin. All right, that one with code 10% premiums, you can buy it, and that's fast. Yeah, well, I don't think so. Because right now it's at 101. 101's, yeah. I don't think you can buy those anymore. I think those are the ones that are carried over. You can only buy the ones that are liquid. Low battery. Oh no, we got a low battery. I gotta plug YouTube in over here. No, that's not working. That makes sense? I'm glad it makes sense. Alright, sorry dude, I plugged in and it's not working. So if YouTube turns off, is what it is. Alright, sorry about that. Alright, let's go. Alright. Do you sell puts to get back in the stock? If you call, you sell, you get executed and assigned. Ginger button. No. To answer your question, Ginger button, the answer is no. I don't do puts at all. You just did a skip the line, the question. Sorry about that, Gallant. Let me go back. So Ginger, what I'm saying, Ginger, what I'm saying, I don't do puts at all. Because remember the criteria I had to come up with to create this strategy. It had to be simple, safe, predictable, consistent, all that kind of stuff. It had to be simple. Once you put puts in, puts involve obligations. So if I buy a put or I sell a put, I'm obligated to do something, and I don't want to be obligated to do anything. Okay, now I have to try to explain it to a 9-year-old. I'm not worried about the volume that happens. There do not think that pays out with that volume. Oh, Bud, Alibaba. Yep, JS Huawei. Oh, I missed quite a bit of them, didn't I? Oh, wow. I missed quite a bit. Okay, 5 rules. Okay, here we are. I remember that one. Okay, I remember that. Hello, happy weekend. Circle Project. Okay. Send tacos. Send tacos. That's funny. I like that name. Your hair looks cool. Thank you. I'm 60 years old. I don't have a whole lot of it left. But, you know, is what it is. The older you get, that's a disappear. Could you? I look at ARR. All right. Blue listener. I can basically tell you before I even look at ARR, it's going to be a no. Okay, here's the reason it's a no. This is what you call monthly options. Okay, 21 June, 19 July, 18 October, January 2025, January 2026. You see how it jumped? It's monthly. What does that mean? That means I can only do a covered call once a month. That means 12 times a year. That means I'm only getting 12% per year. If I am okay with getting 12% a year, okay, not a problem. But I don't. I get 300 companies that are doing weeklies. Weeklies, okay, 14 June, 21 June, 28 June, 5 July, 12 July, 19 July, 26 July. I can do it every single week. And if I get 1% a week, that's over 50% per year. Why would I do a monthly? Okay, so blue listener, that's the reason why I don't know who ARR is. Now, I've only been looking at the exact same stocks for the past 15 to 20 years. Same ones over and over and over again. Okay, that's why I say this is boring. I look at Macy's and 3M every 90 days, and I have been for the past 15 years. The same ones over and over and over again, because they consistently give me my 1%. Now Macy's has been consistently giving me over 2% every week. Okay, I'm up $20 approximately in dividends a month. It's a small start, but I'm looking forward to the California Ninja Lawyer. Austin, what's up? Dave, want to take a look at Macy's? Hey James, do you see stocks rise into dividend announcements or payments? I kind of read that again. It doesn't make any sense. Do you see stocks rise into dividend announcements? No. Only the actual dividend dates themselves. California Ninja, you're liking Coca-Cola and AT&T? Okay, let's take a gander at them a little bit. Not right now. I'll put on the list. We probably won't get to it tonight because it is 10:30. We've got an hour left, and I've got a whole bunch of stocks to take a look at. So, Coca-Cola and AT&T won't be showing up tonight. Sorry. Not Marcos. Subscribe to Marcos Mills on YouTube. Interesting. I love Born in California Ninja. Way to go. Do you have a YouTube where you teach this? KS, yes I do. I also have a Patreon you might be interested in. Okay, get to trade with me every morning. Monday, Tuesday, Wednesday, Thursday. Okay, from 9 a.m. right into the opening of the market, right up to 10:15. On Friday, we jump in at 3. Why? Because most of the positions we do are weeklies. Weeklies expire every Friday. They actually expire on Saturday, but you can't do anything after Friday afternoon. So, we get out at 3. Do we have to do it? If I'm buying it on Monday, what happens on Friday? Okay? BBY. 10 days prior to, so the 3rd. If I buy it on a Monday, collect a premium. I want it to hit a certain target by Friday. Well, if I'm buying it here, this is my last opportunity to make any adjustments to see if there's anything I can do to better my position. So that's why we jump in on Monday, make all our trades on Monday. Tuesday, Wednesday, Thursday, we're just on to see where it's going, what it's doing. Hey, what's up? Basically that's it. Mondays and Fridays are the most important days, because that's when I buy, and that's when I make sure I'm in a profit. Okay? Simple as that. Alright, next on the list. Comcast. Ooh, I like Comcast. Oh, I'm missing some questions. What the dates that are important to get paid for the dividend? Neil, we just did this a little while ago. Let me go back again really quickly. There's only 4 dates to remember when it comes to dividends. The announcement date, basically when they tell you. The EX dividend date, the last day the stock trades before the dividend's paid out. The date of record, whoever owns it on that date is entitled to the dividend. And the payment date, when you actually get it credited to your account. Those are only 4 dates. If you want the dividend, you gotta buy it on or before the EX date. You have to own the stock before the EX date if you want to collect the dividend. I was under the impression that you had to own it all year long to capture a dividend. No, you only have to have it 1 or 2 days. That's it. Buy it the day before the EX date, sell it a couple of days after for a little bit of a profit. That's called dividend capturing. So that's why we first got started. Alright. I play Trifle Cats. Cool beans. Thanks. Huawei. Dragon's Bait, you're really going to give me the ticker symbol. Do you sell weekly options? That's all I do. Alibaba. I actually have some Alibaba. I'll write it down. BABA. Now, when I say I have Alibaba, I do not have it on this platform or in this account. I have it in a different account under a different strategy. So you may not have heard that before. Now, I do have 6 different accounts. I share 2 of them publicly. In those 2 accounts I share publicly, this is the only trading strategy I teach. It's simple, it's safe, it's predictable, and it's consistent. And it's a great place to get started. Okay, now if 50% per year is not okay with you, then you will never get invited to one of the other trading strategies that makes a lot more. So, this one is simple, safe, predictable, consistent, blah, blah, blah. Okay, Dragon Bay, you want to look at Budweiser and Boyd Gaming. I'm not worried about the volume that happens there. Do not think that it pays out with that volume. Alan, I have no idea what you're talking about. Seriously, I didn't go over any volume whatsoever. Alright, where are we? Oh, come on. Questions. More questions, more questions. Uh-oh, I missed some. Oh, alright, we looked at those. What's this question right here? Nope, not worried about the volume. Okay, yeah. Do you sell puts to get back? Yeah, no, I don't do puts at all. What percentage of your portfolio are you allocating for each week? Ooh, that's a good question. 98% of my money is invested at all times. Simple. That's it, 98%. I got a credit card and a debit card attached to my trading account. So, if I need something, there it is. I don't keep any money, well, hardly any money in cash. Okay, less than $1,000 in cash in my checking account and savings account. There's no need. What's the purpose? So, if the call gets assigned and you have to sell your shares, do you just buy the shares back? You know, Ginger Button, that's a good question. That is a possibility, but very rarely. Let me show you why. Okay, let's look at BBY, Best Buy. I'll actually do this right here to make it easier. See, make it a little easier. Here's the dividend for BBY, which is actually this coming up Thursday. Okay, fine. If I like BBY, I'm going to buy it on the 3rd because it's 2 weeks prior. Okay? I'm going to buy it at the market, and then I'm going to see if it hits my target by the Friday. If it hits my target, great. I'm back into cash. If it doesn't hit my target, I carry it into the next week right here. I collect another premium. And if it doesn't hit my target here, well, great. I'll do it again here. So now I get premium, 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 dividend. Premium, 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 dividend. Okay, that's quadrupling the amount of money I would make normally if I'm just buying for the dividends. But normally, I would buy it here. If I hit my target, I'll say thank you very much. See you again in 90 days. Because BBY has a dividend every 90 days from this date. Every year, every 90 days, they pay a dividend. That's great, I'm getting a dividend, wonderful. But what am I collecting up here? Or what am I collecting down here? Nothing, I'm only collecting one. That's why I like doing the premiums before the date. And if it hits my target, great, I don't need the dividend. Okay, I'll take it, but I don't need it. I want the 1% in the first week or the second week. Once I collect that 1%, fine. I normally don't go into a third week, which is the same week as the dividend. Because usually, this day here and the next day, the stock drops. After the dividend is paid, the stock drops. So why would I want to hold it there? Why would I? Well, I'll collect the premium and I'll collect the dividend. But then it depends on what the numbers look like. Well, what did I buy it for? What is it at now? How much did I make? I made a premium, I made a premium, I made a premium, and I collected a dividend. Where am I? Should I get out? Should I hang on? It's all about the numbers. Okay? Once you figure out your date, what am I buying it for? 1762, okay? 1762 to 1750 is the closest. 24 cents, but I'm losing 12, so I'm only collecting 12. It's not quite 1%. It's just a little bit of interesting math, okay? If it's at 1762, you move the decimal point over 2 places. Well, I'm looking for 17 cents per share as a dividend. As a premium. That's what I'm looking for. Well, 1750 is giving me 12, but I'm losing it's giving me 24, but I'm losing 12 right at the top. So I'm only getting 12. The next one up is the 18. Yeah, the numbers just don't work, so it's a no. No for AT&T for this week. AT&T is usually a no. The reason why it's usually a no, because the premiums are horrible. There's a few stocks you will see where the premiums are actually horrible. Maybe they're catching on to what I'm doing. I don't know. But AT&T didn't used to be this horrible. It used to be better. But Coca-Cola, their premium's down also. So they're not offering 1% anymore. They're only offering 0.5%. Oh, 0.5%, boo-hoo. 0.5% still 30% per year. It's really not, and it's really not that hard, not that difficult. AT&T comes up, yeah, that's no brainer. As long as the chart looks good. Well, we're at the high. I don't like it at the high. Look at all this space down here. So I probably wouldn't do AT&T. I'm afraid that it's going to drop and take all that profit there. So I don't want to buy it at a high. I want to buy it at a low. Okay? Okay? This is what it looks like. Okay, on the 20th of May, which was a couple of weeks ago, here we are. Here's our 30-day bottom on the 29th. Here's our 30-day top last week. Okay, well, it's going down. I don't know. Here's a bottom here, not a 30-day bottom, but a bottom. Here, 5 days down, great. Perfect time to turn around and go back up. It could be it right there. I don't know, we'll see. I usually sell puts, get back. Yep, I don't do puts. Sorry. How was the pool? The pool was lovely. It was chilly. I was actually cold. I actually came in and turned the fans off. I was like, oh. I'm here in Florida. Some days it's hot, some days it's cold. Okay, Edward, you want me to look at AAOI? Okay, you're new here and I don't want to be mean to you. Okay? AAOI. $10. Applied Optoelectron. Okay. AAOI. Well, let's see what kind of dividends they pay. Oh, they don't have any dividends. Sorry, Edward. AAOI doesn't have dividends. So it's going to be a no. Okay, so let me ask you a question. When it's going down, which that's all stocks do, you look, went up, came down. Oh, went up, came down. Up, down, up, down, up, down. That's all they do. So here's the question, Edward. When the stocks go down, what are you collecting? Nothing. Okay, if I had AT&T, even though the premiums are horrible, at least I'm getting a dividend, and that dividend increases every year. Okay, so that's why I only have 300 stocks in my portfolio. I don't have them all at the same time. Okay, I buy one, I collect that nice little 1%. Thank you. I move on to the next one, I get 1%. Thank you. I move on to the next one, get 1%. Thank you. Okay, I look for a safe, predictable, consistent 1% per week. That's what I'm looking for. All right, so AIO doesn't make the vowels, not in this situation. Okay, Altria is next. Did we look at Altria already? Yes, we did. We looked at Altria this afternoon. One of the new guys bought Altria, and I bluntly said, why? I may have said it too quick. Why? You bought Altria this week? Why? All right. Take more some of these questions. Okay, why do Coca-Cola and Pepsi stock almost move the same? Well, let me think. Most people like an ice cold Coke or an ice cold Pepsi when it gets hot. It's not hot in December, October, November, January, February, March, April. But what happens in May, June, July, August? Well, yeah, it starts to get warm. More people buy Coke and Pepsi. They're almost parallel with their movements. Because one is the number one soft drink in the world, and the other one is the second place. Okay, so yeah, they move predictably. It's like all oil stocks move predictably the same direction certain times of year. All right, Caleb makes money on weeklies. Good for you, Caleb. Unless Coke and Pepsi have a bad year, their revenue shares between food and drinks are similar. Yep. Yo, 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 yo. Okay, Pierre. Is that Piero? Piero Laney? Is that right? Okay, anyway. Great job. I done 90 minutes. Yay! Randall Ray, dude, you left me a number. I tried giving you a call. You didn't answer the phone, dude. Uh-oh. Broadcom today. Your resonance showing up. Way to go. Fascinating. Thanks for the explanation of your thought process. Okay, glad you like it. I bought Broadcom today. Cool. If you were a profitable trader, you wouldn't be selling a group. I don't remember asking anyone to buy anything tonight, or last night, or the night before. GILD. Ooh, that's another good one. GILD. How do you calculate your premiums? Your residents, I don't calculate the premiums. The market maker puts the premiums up. So whatever he thinks he wants to collect, that's what he does. Okay? So, in this instance, we're looking at Altria. The bid is 44.16, the ask is 44.32. That's a 6-cent spread between the two. But look at the premiums on the options. The market maker does that. And they do that, oh boy, with they have this really strange pricing method. HPE has dividends on Tuesday. Yeah, but HPE is always a no, because you're not the first one to suggest that stock. But I'll take a look at it for you. How the weather in Florida? Did you get flooded out? Nope, didn't get flooded out. I did go swimming in the pool today. My little buddy came over, and he played in the pool. What is your opinion on Cody? Ooh, Cody would be great if they had more history behind them. Stargirl 415. All right, so let's take a quick look at Cody, because you're not the first one to bring up this company. Alright, so this is the reason why I don't like Cody. You go all the way back to 2006. Okay, we're in 2024. 2006 was 18 years ago. Not quite 20, but alright. Give them the benefit of the doubt. Let's take a look at the numbers. You ready? In 06, it was 13 cents, then it was 26, then to 30, 33, 34, 34. An awful long time at 34. Didn't increase. So they don't increase consistently. 34, 36, 36, 36, 36, 36, 36, 36, 36, 36, 36. Okay, so for like 10 years, it was stuck at 36. No consistency on the increasing whatsoever. Okay, it went to 36, then to 88, then to 36. And whoa, wait a second. In 2022, they started cutting the dividends. So it goes from 36 to 25 to 25 to 25 to 25 to 25 to 25, and they haven't increased it since. So when I say I like dividend stocks that have consistent increases in dividends, this one sporadic, but then they cut their dividends in the past few years. So why would I have it on my list? Okay, so I have about 300 companies and I have more than I can handle. Okay, I don't have as much money as you think I do. I only get 1 or 2 or 3 positions per week. All right, so 1 or 2 or 3 positions per week. What am I looking at? Okay, look, I look at between 5 and 30 stocks every week just to pick out 1, 2, or 3. And it's not whether I like the stocks or not, because I have no problem with any one of them. It's always yeah, but what is the chart telling me? Is it the right time? Because I don't want to buy it at a high, and I don't want to buy it at a low. I want to buy it when it's coming off of the low, right? Not coming down from a high, but coming up from a low. And it's not that difficult to figure it out. I mean, first thing you look at, the high, the low, where was it, where is it, what direction is it going? Basically sideways. Okay, so for the year of 2024, it was 44. Where is it now? Well, it's at 44. Well, what did it do all year? Oh, not much. Went up and it went down. But 44. What was the stock at in 2024? Well, it was at 44. They don't say anything, but it dropped to 39. It went up to 47. No, for the year, it was at 44. That's it. Okay? I really don't care what it has done. The only thing I care about is where it's going to go in the next 5 or 10 days. Okay, so let's take a zoom in on this particular one. This is what I said to him this morning. I said, why? Look at the chart. 30 days ago, here we are. She goes up to a high, you got your profit taken. She comes down, a new 30-day, well, not a 30-day bottom, but a bottom, okay? Profit taken, she drops down. Okay, then she shoots back up again. Now she's starting to come down. So why would you jump in here? Why not wait until it gets down to the bottom? Well, today's the bottom. Well, he bought it a couple of days ago, and he endured that gap down. It is what it is. But anyway, Dawn, Spider? No, sorry, I'm not even going to look at it. They don't offer dividends. What do I trade? Did you just ask me that? Dividend stock talk. What do I trade? I trade dividend stocks. There you go. Dividend stock talk. What do I trade? I trade dividend stocks. Specifically those that have increased their dividends consistently. What's the problem? Even if he does, just more income streams. Okay, Mindy, I'm not 100% sure I'm following your question. I meant the percentage. Oh, how do you figure out the percent? Oh, that part's easy. That's the easy part. Okay, you ready? I'll show you how easy it is. You ready? Okay, because this is the easy part. The last traded price, 44.32. That's the last trade of the day. That's all. That's what it means. The last trade of the day. The bid. What can I sell it for if I own it? If I own it, that's what I can sell it for. The bid. If I want to buy it, this is what I'm paying. 44.32. So how do I find out what 1% of 44.32 is? See the decimal point right there? I move it 2 places over. That's it. 1% is 44 cents of $44. It is actually that easy. Okay. Now, how do I figure out my profit percentage? Well, that, you take whatever you're making off of that stock, here it is, 25 cents a share, and you divide it by your purchase price. So your profit's 25, your purchase price is 44.32. It's going to be somewhere a little bit over 0.5%. Okay, you just do the math. Okay, got my calculator. 0.25, which is 25 cents, divided by the purchase price, 44.32, 44.32, comes to a grand total of just over 0.5%, 0.56. 0.56. What does that come to a year if you're only getting 0.5% per week? Well, 0.5% per week for the whole year, you know, week after week after week, that's still 30%. What is wrong with 30%? Nothing at all. Okay, so do I like Altria? Great. at this moment in time, the 44.32 is paying 25 cents, which is 0.56. 0.56 every single week is 30% per year. 29.3. Same thing. Okay? Okay. What are my thoughts on when? When? No. Did you see how quick that was? No. Why? Well, it's monthly. What does that mean? It means it doesn't offer weekly options. It means I can only do it 12 times a year. 12 times a year at 1%, that's only 12% a year. 15 or 18 if I'm lucky. I would prefer 1% per week. Don't get me wrong, I'm sure Wendy's is a nice business. I'm sure there are a lot of nice people there. But it doesn't fit in my parameters for this particular trading strategy. So it's a no to me. Is it a good time to buy NVIDIA? Easy peasy, glad you like it. Wendy's, no. You are not checking all your devices, Hukana Matata wrote on Instagram. 2% for coffee. He wrote that like 15, 20 minutes ago. 2% for coffee. That's the last thing I've seen. Okay? I waved when you joined in. I waved, and then you wrote 2% for coffee. You haven't written anything else since then. Okay, so you're right there. Oh, look at this. YouTube turned off. Oh well, is what it is. Alright. Holy cow, we're 11 o'clock, the last half hour to go. Last half hour. Okay, so next on the list is going to be Walmart. WMT. WMT. No. Pretty quick. Thoughts on XPO? I can tell you right now it's a no. What stocks do you invest in to get that 1%? I never said anything about 1% per day. It's 1% per week. Okay? I don't want to sit in front of the computer trying to get 1% every day. No, thank you. Okay, I'm very comfortable where I am. The greed has been done and over with. Campbell Soup, we looked at that last night and it was a no. That's very nice of you to wave. I did wave, but I wrote something before that. No. There's something from Michael Sinclair, something from Ratada, Chris, Mama said, and then I waved, and you said 2% for coffee. That's the last thing I see that's on there. That's very nice of you to wave. Okay. If someone has limit purchase, LMT, Lockheed Martin, for 150 in the 1960s, how far out of the money should the covered call be? It would depend on what it's at now. And what do you plan on doing with it? LMT. Yeah, it's at $9.70. Chevron and Exxon. Ooh, CVX and XOM. Nice ones. I like both of those. That's strange. Instagram filtering messages. Really? You're saying Instagram, which is owned by Facebook, is monitoring the public's interaction with each other, and you're surprised? Ooh, Stag. I used to buy Stag a long time ago. And Ozark? OZK. Yeah. So I'm finding it amazing that you're amazed. You said you don't buy puts. Do you sell them? Nope. Don't do puts at all, Simba. What about NVIDIA? Alright. Alright, somebody wants to look at NVIDIA. NVDA. $131. No, I don't like NVIDIA. Why don't I like NVIDIA? NVDA. This is why I don't like NVIDIA. You ready? It's at the high of the year, okay? Which means I don't like to buy at the high of the year. No guarantee it's going to continue to go up. I'll tell you what, this looks very familiar for those who are witnessing the gold rush of the 1980s. Gold was at 150, and then 8 months later it's at 800 and change. Look very similar. Way down here, shoots up like a rocket. The people who bought it up here had to wait 30 years to break even. 30 years. Okay, so gold went from $150 an ounce to 800 and whatever an ounce within a very short period of time. And the people who bought up here had to wait 30 years to break even. Not to get a decent return, to break even. 30 years. Okay, now it's jumped up. Okay, so that's not what I'm saying. What I'm saying is the chart looks very similar. So buying it at 132, where's the guarantee that it's going to be at 132 or higher? Well, who knows? I don't want to take that chance. I want consistency. I want predictability. And here's another reason why I don't like NVIDIA. The dividend, 1 penny. You want to see again why I don't like NVIDIA? Alright, let's go down to NVDA. Boom. Alright. Dividends are crappy. I think it's statistics. I think. We're going to go take a look at the book value. Well, here's a good number for you. Are you ready? Now, revenue per share, $3.23. This thing was at $1,200 just a couple of days ago. Here's the other reason why I don't like NVIDIA. You ready for this? Book value per share, $2. Okay? Now, a couple of days ago, the stock was at $1,200. $1,200. What's the actual company worth? The company's actually worth $2 a share. That's a hard number. Okay, you liquidate everything that company owns, and you're going to get $2 a share. Yet, you want to pay $130. Well, it's $130 now after the 10-to-1 split. But last week, it was at $1,200, and that didn't change overnight. Okay, it's still worth $2 a share. That's just, oh yeah. You like this one? You like this one? 5-year average dividend yield, 0.12. 0.12. That's the average dividend yield for that. Okay? The forward dividend rate, 0.04%. 0.0. That's just freaking ridiculous. The numbers are just sad, and I don't know why people keep buying the damn stock. But it is what it is. That's why I don't like NVIDIA. Okay? Will CEI come back? CEI. Camber Energy. Wow. Mr. Felix, I felt bad for you. I do. I don't know what it was you saw in this. I don't. So a year ago, she's at $1.26. Now she's at 14 cents. I would do some serious research. Why did it drop so much? What's wrong with it? Okay? Okay, reason number 2. At 14 cents a share, I doubt they have 20 years of increased dividends. Okay, that's reason number 2. Reason number 3, it's a monthly options. I can only do it once a month, which means the most I'm going to get is 15% if I'm lucky. No. Sorry. And I don't know what you were thinking when you bought it. because I don't tell people what to do. Really, I don't. If you think that this is a good company and that's where you want to put your money, more power to you. Okay, I only invest in companies I know of, I've heard of. Okay, Walmart, Walgreens, Home Depot, Lowe's, Coca-Cola, Pepsi, Bank of America, AIG. There's a list. There's about 300 of them. Those are the only ones I do because they're safe and predictable and consistent. Safe, predictable, consistent. And I'm only looking for 1% per week. All right. So I'm sorry that you put your faith in CEI. Next on the list. Oh, did we do Walmart? Oh no, Walmart was a no, wasn't it? WMT. Yeah, Walmart's a no. Okay, they're at the high of the year. Get all this space down here to drop. Okay, after it drops, yeah, I'll take a look at the rebound. That's about it. Yeah. All right, so that being said, next question. Oh, look, someone bought me something. Fascinating football video bought me something. Oh, that was nice of you. Alrighty. Yeah, you remember the Dutch tulip? That was funny. Alright, AT&T. What do I think about ENPH? Never heard of them. Okay, more than likely it's going to be a no, not for this strategy. This strategy is pretty simple with the rules. It's got to have 20 years of increased dividends and then weekly options. And if it has weekly options and 20 years of increased dividends, I would know who they are. Because I've been doing it long enough. I look every week to see if there's a dividend stock company that I may have missed. Okay, since January, I've only missed two. One of them was Whirlpool. I forget what the other one, GIS. What was GIS? Alright, I'm going to have to look it up. GIS. General Mills. That was it. Whirlpool and General Mills. Those are the only two I missed. Alright, so, next on the list. I thought you were traveling today. No, it's tomorrow. Tomorrow is Saturday. Tomorrow I'm heading down to Okeechobee, hang out with Doc. Doc came up, well, I came out with the software. Doc is putting it together, and it's hopefully it works the way that I want it to work. What else are you thinking at the moment? At the moment, I'm not thinking anything at the moment. Walmart. Yeah, Walmart's a no. Sorry. Kroger. Ooh, Kroger. Ooh, that's in a downturn. Okay, 50.59. The 51s are going for 123. More than 2%. I like it. How about HUBC? HUBC. Hub Cybersecurity. Sorry, dude. Never heard of it. Okay, seriously, Benjamin. Okay, if it has no options and it's at 82 cents, 86 cents a share, it's not going to have 20 years of dividend increases. So I really don't like it when you guys do that. I ask, very simply, 20 years of increased dividends and weekly options. This has no options and it's less than $1. How can you have 20 years of increased dividends if the stock is less than $1? I shit my pants after this week. Only weed, okay. AT&T's a no. DXY's a no. Hollyweed, 80 to 100,000. Okay. What 1% are you looking for? Can you explain, please? What software do you use? Alright, G-Dog. This is not my software. It's not software at all. It's a trading platform. Okay, so if you go to, E-Trade, Charles Schwab, Fidelity, or wherever you trade your stocks, you're going to have a trading platform. A place for you to look at the stock, a place for you to look at the numbers, the bid, the ask, the high, the low, the close, all that kind of stuff. And then the option chain, you're going to have that there. And then you'll have access to charts. can tell you what the stock has been doing for the last whatever time frame you want to look at it. So yeah, it's not a software. It's free. You can download it on your laptop or your home computer. Okay, I prefer the laptop version or the downloadable version. I don't like the online version. The online version doesn't seem to have as many perks. Okay, and that doesn't thrill me at all. I like perks. Okay, I like what I'm looking at. I like knowing that the calendar is right there. Okay, I like the trigger trade. I like the seasonality. Okay, it's all readily accessible. Ooh, look at that. Tesla to the upside. All right, let's get back to where we were. My eyes are getting heavy and my sight is getting dim. Boeing. Nice thing about Boeing's been in the news lately. All those recalls and all those planes falling out of the sky. Great opportunity. Why? Because you're going to have all the pansies dropping it like a hot rock. It's going to fall, hit an all-time low, and that's a great time to buy. You can't get any lower than the low of the year after a bunch of bad news. But Boeing is part of the, what do you call it, the military complex. They have all these military contracts, so of course they're going to find the bottom and then go back up again. They'll fix the mess. Same thing happened with Exxon. Remember the Valdez when it crashed on the Northwest? Okay, the stock dropped. Same thing with British Petroleum in the Gulf of Mexico. They sprung a leak. The stock dropped to a certain point. It got to that certain point. I said, oh, hell no. Okay, British Petroleum is worth more than $54. I bought a bunch of those and it just went up. But let's get back to where we are. Okay, Walmart, Kroger. We're looking at Kroger next, right? Before we got interrupted. Kroger. 50, 59, 50, 59. 50s are going for 170. Take the 59 off there, that's still over 2%. The 51, yep, that's over 2% also. But what's the chart telling me? The chart's telling me something different. First thing I want to look at, the high, the low, where was it, where is it, what direction is it going? Well, it's pretty easy. Okay, it's right there, it's right there, it's right there, it's right there. Simple. Not that difficult. Last 90 days. Now I could look at the 6 months, 8 months, 5 months, 4 months. No, I like 1 year, 90 day, 30 day seasonality. I like to know where it is, what direction she's going. This is the last 90 days. Okay, high, low, where was it, where is it, what direction is she going? There you go. Simple. Actually, it is that simple. The high, there's the low. There was it 90 days ago, there is it now, and that's the trend. Pretty simple. Let's go to the 30 days. That you can't mistake for anything else. 30-day high, 30-day bottom, right there, yesterday. That's 1 day to the upside, even though it was a down day, okay? Even though today was a red day, okay, so she closed lower than she opened. The low of the day is still higher than yesterday's bottom. So that, yesterday, is the 30-day bottom so far. Monday's another up day, and a good time to jump in. Because once you isolate the 30-day bottom, you can't buy it any lower than the low of the 30 days. Okay? Now, you've heard it all your life. When you want to make money in the stock market, you buy low, you sell high. Well, you can't get any lower than the low. Do you really think Kroger's going to disappear? More than likely not. Okay? Alright, so, next on the list. Who came up with PSX? PSX. Phillips 66. Ooh, now that looks interesting. 136.75. Check it out. 136.75. The closest strike price is going to be 137. Okay, the 137. Look, $1.60. That is over 1%. Great. What's the chart telling me? Well, here's the high, here's the low, here is the direction it's going. Okay, that's where it was, this is where it is, this direction it's going to the upside. Great. Great. Let's take a closer look. Last 90 days. Okay, 90 days ago. High, low, where was it? Where is it? Look at this right here. The last couple of days. Yesterday was the 30-day bottom. Well, yesterday is possibly the 30-day bottom. We only have one day up so far. Last 30 days, here we go. What does that tell you? The high, the low, where was it? Where is it? Here's the direction. It's going down to the bottom. The bottom was yesterday. Today we're a bit higher. Great. I want to look at PSX next week. PSX. Had to write it down. Okay, so that being said, what does it normally do this time of year? Normally this time of year, okay, for those of you that are new here, the blue line represents this year, the red line represents the last 10 years. Average movement. January 1st, December 31st. How does it normally move throughout the year? Basically, just goes sideways. And I hate saying sideways. Well, actually, this has a tiny bit of a downward spot turn to it. Look at it. Here's where we are now. Okay, June 14th. That's 1 week right there, basically sideways. The 28th is 2 weeks, a little bit down. The next 2 weeks, a little bit. But you gotta ask yourself a question. Do I like Phillips 66? Okay. Yesterday could be the 30-day bottom. It's all going to depend on what happens on Monday. Okay. Next on the list, Newmont, N-U-E. Ooh, interesting. Oh, Nucor. Sorry, Nucor, not Newmont. NU is Newmont. NUE is Nucor. All right. All right, you know, hey, I've been wrong once or twice. 156.87 for the 157s. Nope, not even close. Sorry, even if the chart looks interesting. But even though today was a green day, she opened up higher. She ended up higher. Still made a new bottom 30-day period. For the year. Okay. But if the premium doesn't work out, no sense jumping in. Typo. Why is AT&T a no? G-Dog. I'm going to show you why AT&T is a no. You ready? 1762. The 18s are going for 3 cents a share. The next closest one is 24 cents a share. Okay? But I'm losing 12 cents right at the top, which means I'm only bringing in 12 cents on a $17 stock. That's not even 1%. PANW. Never heard of them. Okay, so hopefully, G-Dog, that explains. It has nothing to do with the chart, even though the chart is a little on the high side. Look where it is, way up here. Now she's in a downturn. But she's still got all this space over here to worry about. It's AT&T. Is it possible? Okay, your resonance. I'm still not seeing what you're talking about is what possible. WBA. I'll take a look at that. Typo. Can you get Thinkorswim if you're in Europe? Oh, you need a VPN, dude. Seriously. If you seriously want to invest in the U.S. stock market, you need a VPN. Okay? A virtual private network. You can sign in anywhere in the world. Okay, the Mandalorian. Okay. CVX, that's Chevron. We actually have it written down. Devon Energy, we will take a look at that tomorrow. DVN, take a look at it tomorrow, because we get on to one more stock for the day, and then that's going to be it. So, which one is it going to be? Ooh. Let's look at Walgreens. Disney, Caterpillar, ooh. CAT, DIS, Stag. Stag is already on the list. Don't you have to make KYC? KYC, I guess that will now. CL, Colgate Palmolive. CL, Colgate Palmolive, it's a good choice. When to buy and when to sell, how did you decide? When to buy and when to sell. CIGN, I've never heard of CIGN. Oh, Cigna, CI. Yeah, we'll take a look at that tomorrow also. So, let's get back to what we're talking about. Walgreens. Let's do Walgreens. WBA. Here we go. Because we're waiting to find a 30-day bottom on Walgreens. No, your customer. CYK. I didn't know what CYK meant. Alright. WBA. Walgreens. 15.54. Let's take a look at the 15.54. The 15.50 is going for 27 cents. That's well over 1%. Great. High, low. Where was it? Where is it? Which direction is she going? Great. I like this right here. Let's take a quick look at this because we're looking. This is another one that we're looking to find the bottom of the year. Not a 30-day bottom, but a bottom of the year. Okay. Look, way up there, way down here. Okay. Now. Here's our last 30 days. Okay? 29 days ago, we had a 30-day high. She drops. 30-day bottom here on the 28th. A little bit of retracement, and then we're just kind of channeling to the side. Okay? There's a possibility that could be the bottom right there. We got the 30-day bottom over here, and this could be another bottom over here. So we have no idea which way it's going. When she does this thing right here, no idea exactly, hypothetically speaking, she should be going to the upside. Okay. Alright, that's it for the day. Now what does Walgreens normally do this time of year? This time of year, Walgreens usually, well, goes flat this week, 21st, and then a tiny bit of a dip next week. Tiny bit of a dip. But you gotta like Walgreens. And I do like Walgreens because they're very nice to me. Always giving me more than 1%. Alright, so that's gonna be it for today. You guys have yourself a wonderful day, and we'll see you again tomorrow night. Guten Nagen. Alrighty, you guys have a great day. We'll chat with you again tomorrow. Good night. Bye-bye. Finish. Cancel. Oh, wait a minute. Yeah, that's right. Post for 30 days. There we go. And you guys are done here. See you guys again tomorrow. Investing in dividend stocks for a safe, predictable, consistent 1% per week. using pre-qualified dividend stocks that consistently increase their dividends to their shareholders year after year after year. Alright, you guys have a nice night, and we will see you again tomorrow.